Hello everybody and welcome to this video. So today I am going to be talking about the easiest day trading model for beginners. I'm going to be talking about the two-step model. Now I have been doing a series of videos which I'll link to based around gold. But in this example, I'm going to use the Euro USD Forex. Now I don't personally trade Forex, but I want to show you the model using this example. So first, let me show you the steps. So right here on the left, I've got 5 steps. Step one is simply finding a range, and this will be typically after a swing point. So on the right hand side, you can see I've got Euro USD. It's a 1 hour time frame. You have a swing point here. Now this move, which is your A to B leg, is triggered by an SMT. This is very important. So you can label this high as A and this low as B. Now the A to B leg is usually a strong move. Not always, but a strong move. Now we want range 2, which is a retracement or corrective leg. It goes back into range A to B. Now this move is shorter than A to B, and we want price. So this is where it's important for beginners. We want price to go into our kill box, which is the 50 to 70% fib. Yes, all fibs work, but for beginners, we are only looking for price to go into, so you can go to or inside that kill box, 50 to 70%. Now, one thing is very important about step two. Price cannot go beyond the 70. It cannot close beyond it. It can wick, but not close. So if you're looking at the 1 hour as your main time frame or your high time frame, price cannot close above the 70 fib on a 1 hour candle. It can wick, but not close. If it closes, it invalidates the model. Step 3 and 4, which you kind of use together. We want to check for a couple of things. First, we are looking for a fair value gap, which we have. As you can see, this fair value gap, and this will appear in your A to B leg. We also want this fair value gap to overlap the kill box, which is between the 70 and the 50 fib. So I'm going to draw the fib so we can see that 50 to 70 kill box. We also want SMT inside this location here. Now we have the SMT, and this is with pound USD. So very important when you are trading that whatever security you are focused on, you are also monitoring a, a correlative pair, right? A pair that is correlating with the currency or security you are looking at. In this case, I'm looking at the Euro USD. So on a separate screen or separate tab, I'm also looking at the pound USD. This is very important. The final step is your real trade management. Gonna select your entry inside the kill box, and you're going to target 100%, which is A to B. Of course, this is after you see the reversal on the lower time frame. The reversal on the lower time frame is going to be exactly the same as the higher time frame, give or take. So on the left, I've got the 5 minutes. Using the 5 minutes, as the lower time frame for the um, 1 hour. When price gets into, let's do this, see if this works. Okay, so right here, I'm anticipating a sell, and I've got the 5 minutes. So when price goes up here, if I'm being aggressive, I would have taken that sell because that's a very strong rejection. Or you simply look for your two-step, which you have here. That doesn't reach the 50. Like I said, that's probably around the 30 or so fib, but all fibs work. Usually it hits the 30 fib when price is being aggressive. It wants to run. So let's use a different fib here. When price really wants to run, it uses that 30 fib. But for beginners, I'll expect you to just wait until it gets into this 50. So for both higher time frame and lower time frame. Once you have that, you just take your entry, you put your stop loss above this point because you took the entry closer to the 50%. Now, if you took the entry closer to the 70, then you want your stop loss above point A. What are we looking for now? We are looking for 100% of the move. So you grab your fib, place it right there at point C, and we are looking for 100% of the move. So if we move a little bit further down, there we go. That's it. All done. This is a very quick move. That's 100% of A to B. So that's the two-step, 5 steps. Find AB range, step 1. Find BC range, step 2. Critical price must not close beyond 70% fib. Step 3, we are looking for a reversal on a lower time frame, which is aligned to the higher time frame. At the same time, we are checking for SMT, which can occur on the higher time frame and the lower time frame, or just the lower time frame, or one or the other. Best when it happens on both. And we are checking for fair value gaps. All of these things must overlap with each other. Once you have that, you have the confidence to then enter your trade, target the 100% or the lowest hanging fruit. Now, this model, I like to say it's a 50-50 model, which basically means use your experience when trading this model. So the security you trade, the personality of the security you trade, the context around the security you trade. For example, it might be the time you trade, the days you trade, the week you trade, all of these will affect overall outcomes to this. But you have a foundation that you can build on and just repeat over and over again. So there you have it. Hopefully you got some insights into what I think is the easiest day trading model for beginners. If you like the idea of the two-step and you just want to see more, please like the video. Please subscribe to the channel. And if you can, of course, share with your friends. Thank you for watching, and I'll see you in the next video.